Perfect. So thanks everybody for taking the time to join me. I'm Greg Schnell, and I am the Chief Investment Strategist for Osprey Strategic. What we wanted to share today was methods to protect your account from drawdowns, especially during a bear market, and then how to be involved in the market when it is trending higher. And that's really what we like to focus on. So today, we're going to focus on capital preservation. There's a reason that's the theme today. But as we go through the charts, feel free to put your questions in the chat box, and then I can answer them towards the end if that's okay. So for those that don't know me, I've been writing with stock charts for over 10 years. There's thousands of people that read my newsletter every week. So that goes out through stock charts. And then I also have a private client newsletter that goes out. People from all over the world are clients of mine. And I did write the book Stock Charts for Dummy with Lisa Epstein a few years back already. But anyway, so my background is in technical analysis, and hopefully you'll find some of the information we present today a little bit interesting. So I want to show you how to protect your capital. I think that's the single biggest thing that we need to be aware of in a bear market. And I was on just reading through Twitter this morning, and so many people lost 30 or 40%, and they were owning a dividend stock in a bear market. And the problem isn't just owning a dividend stock. The issue is a bear market leaves very few souls untouched. And so the goal that I want to share today is perhaps a method of participating in the market when it's strong and protecting capital when it's weak. And if we don't get the opportunity to do that, one of the big issues we'll have as we go forward is that the market will basically take our capital away. It'll run a stock up and run a stock down, and we just don't make any real money here. So what we want to talk about is how to prevent that from happening. So I want to get into when to buy, what to look for, what to buy, when to sell, and how to protect from losses. And you can do this just starting out with a $5,000 or $10,000 account, and you can manage millions with it. Hopefully you'll find it pretty interesting. So we have 7 main components on the website: a video, a newsletter, a chart list that you can refer to often, Osprey opportunities. I'll cover off exactly what that means. And the daily setups are 5 charts a day by one of our technicians on staff. And he puts out some of the best setups that he sees. The Schnell Strength Indexes, which are really a core part of the website, helping you understand where we are in the market cycles, and a monthly conference call. And if you have any questions, I'll be offering you a subscription offer today, a special offer, to see if what we can do will help you. Anyway, if you have any questions, please make sure to get them asked today. So first of all, the weekly video I mentioned, we review 5 asset classes. It comes out on the weekend, usually on a Saturday, tries to show where the market is strong or weak, and hopefully you'll find it educational and logical information. So I don't try to derive my commentary from the news. I try to derive it from the charts and where people are actually putting their money to work. And I think I think you'll find it's a very strong way to participate in the markets. The newsletter, at the top of the newsletter, I think for people who have very little time, they might not want to watch a 1-hour video or read a newsletter with 30 or 40 charts in it that they can just scan through in 10 minutes. They want a 1-page summary. So we try to offer that 1-page summary, highlighting where we think the market is, and just a review of the different asset classes. So with that, we'll highlight some of the best industries going forward and try and make sure that you are aware of the changes that are happening around us on the market. And I'll connect the Schnell Strength Indexes with the market. The weekly chart list is a chart list that you can just go to at any time and scroll through, and it'll have some of the most important charts that I think are in the market currently. And then as that changes, we'll try to keep updating that chart list so that you've got the latest and greatest. The Osprey opportunities, what we try to point out there is the faster moving sectors, and we don't actually go in and label all the stocks buy here, sell here. It's just a list of strong stocks, and you can choose from it I think what you'll find is typically if you're in the market during the strong market moves, you'll make money. And if you miss the big downtrends, obviously that's the difference. So you end up with a staircase approach where you make money, go sideways, make money, go sideways, and you just don't have these give it back moments all year. So hopefully that will help. And then when we get into the daily setups, it's a quick, I put the Schnell Strength Index daily readings up there, and then a quick market commentary. And then after that, we have 5 charts, at least 5 charts that you could look at to try and review. And the idea of these daily setups is they're breaking out of patterns, and I think you'll find that pretty helpful. And then the Schnell Strength Indexes, this is a core guiding principle for me for when to be invested. So literally, I kept making money in the market, giving it back, making money, giving it back. And so what the purpose of the strength indexes was to change that and try and miss the downtrends and participate in the uptrends. And so even if the market is in a big uptrend and my strength indexes start to weaken or whatever, it's probably giving us a clue that there's a market rotation about to go on where they're leaving one sector and going into another sector. And so at that point in time, it can really help us identify that there's shifts going on beneath the surface. So while the index might still be traveling higher, let's say that we were in all the SPAC stocks back in February 2021. Well, then we're starting to see market weakness. These stocks are starting to get hit. And so at least it gives us a reason to look closer under the surface and see if we can identify some stuff. And I'll give you some examples of that today. So when the market is thrusting higher, almost everything goes up, and you can go to most charts from this year. And if you looked at whatever, I'll just pick some dates. March 28th, that was a market high. June 13th was a market low. August 19th was a market high. So as you roll through these dates, October 13th was a market low. As you roll through these dates, if you looked at most charts, you're going to find that they probably had a bottom in the same place or a top near, like within days of that same place. So it does help regardless of what we're looking at, how the market moves. Now, a few stocks will continue on. They might only have a brief pullback and then continue higher. But the idea being, as these stocks start to respond, if everything's going up, it's a lot easier to make money in the market. If everything's going down, it's a lot harder to make money in the market. And that's what these strength indexes are trying to tell us. So, and then the last thing we're going to get into is the monthly conference call. And that's a big picture overview where we cover off market cycles, global backdrop, and you can answer questions directly. And we'll actually be doing one of those very soon. So with that, what the idea behind the Osprey Strategic website is to have a strategy to make money in the market. We are protecting the capital. That is critical for us. If you don't have capital, you can't keep trading. And so when we have a weak market, we don't want to try to trade through that. And I think the people who traded from August to November probably felt that more than anything. You make a couple of days of profits and give it all back by the end of the week. And then a subscription service needs to be affordable to achieve gains. But basically, I look through these charts all the time. I'm looking around to try and figure out where the market is going. The biggest thing for me is I'm doing this work anyway, so I publish it. If you felt like you wanted to go through 400 or 500 charts every weekend and write out a newsletter and try to get a feel for everything going on, it's not impossible. The whole idea here is just to save you some time and some approach time for the market and give you some ideas on what I'm seeing. But we want to identify themes from chart work, not fundamentals or stories. And the reason, much like being a utility investor in a bear market, while the utility stocks might outperform the S&P 500, meaning it might only fall 10% if the S&P is down 20, you still lost 10%. And then the second part of that is you're subject to the fact that a bear market eventually takes everybody's capital away. That's just kind of how bear markets work. So we have very few stocks that can survive a big bear market. And so when you're trying to collect dividends through that cycle, you might be losing 5% of your capital to get a 1% dividend for the quarter. And that's where it gets really hard, is your capital is being eroded, but you did get the dividend check. So let's just pick an example. If a bear market lasted 6 quarters, you'd have received 6 or 8% in interest payments, but you might be down 10, 20, 30, 40%. Well, by the time your stock starts to come back, yes, the dividend looks a lot bigger near the lows. But the real concern we have is we still have to make back all that capital again. And that's where the hard part of the market is. So we want to be ready to buy near the lows when the backdrop improves. You might end up timing that to get your dividend payment as well. But the bigger issue that we want to make sure is that we protect the capital. So let's go through those different components. And what you'll see on the website as we walk through, or some of the ideas that I'll present to you, I'm just trying to show you why we have these 7 steps in the website to help you make money and kind of keep you on the right side of the market. So the weekly video, we review all of the 5 asset classes every newsletter and every video. And as I go through the charts, I literally just start with a cup of coffee sitting beside me and flip through my charts, and a story starts to unroll, telling me, market's getting weaker, charts are having trouble going higher, or the market's trying to make a bottom here, it's trying to push up. And so as I work through 300 or 400 charts, the story starts to come out as to what the market is doing and how we need to behave. And so the idea behind the overall video is to take an hour and share with you how a technician views the market. So you won't have any, on the earnings call, I heard this and all. We don't do any of that. I've never had a CEO tell me to sell their stock. So what we want to focus on is, what is the price action? So what are investors doing with their money, and trying to be aware of both positive input and negative input when they're not pushing the market higher. So again, we'll discuss the breadth of the market. That gives us a lot of clues. The Schnell strength indexes. I like to look globally and try and make sure I understand. Like, as an example, who would have thought 6 or 8 weeks ago that the European markets would break out to a new high? I know I didn't, but I'm looking at my charts and they're trying to break out. And so I shared that with members, and I'm sure many people are amazed, but they actually made, big moves higher. So that was pretty good. So what will happen is I'll basically have a theme for the week. And this was the mid-August top. And basically a fuse is lit that the bomb is going to go off and we're going to go lower. And I think that was a pretty timely newsletter. And then as we headed into the October 13th low, the newsletter was saying oil breaks out. And why is that important? Anyway, I'll get into all of that in a second. So once we cover these themes off through the newsletter or through the video, then the next day I write a newsletter. And the newsletter idea is to give you some charts to scan through and provide links to those charts so that you can go check them out. But at the top is a 1-page summary of a newsletter. And again, it's bullish or bearish bias from a chart review. The only input I try to use is my charts. I do very little listening of the common media because I just find it clouds my judgment. Charts review industries, sectors, and indexes to see what's going on. And if money is starting to be pushed into, say, industrials, well, everybody's looking over at tech, then that's the idea behind this exercise, is try to figure out where the money is moving. I live in Calgary, so there's a lot of commodity coverage, but commodities can move just as fast as tech. And there were oil and gas stocks up over the last 2 years. They were up 500, 600, 700%. So I like commodities as well as tech and financials. Well, I'll say some of the new financial innovative tools. The older financials tend to move slower, but at least they move. Anyway, we're aware of the changes in trend and we want to stay on top of that. And we'll try to share those through the Osprey opportunities. Now, this is an example of the newsletter So on the Friday, October the 8th, this was the chart shape. So we're staring, the market had just had a huge move down on Friday afternoon, dropping almost 3%. Felt terrible, looked very similar to the price action around the September top, and the market was really starting to fall. So the next day, the newsletter comes out, and I just said, my charts are changing. I'm turning very, very bullish. And the main point here is one index will tell you something, but all of the charts across the market are different. And you need to be, if you want to do the homework, you need to go through all those charts and kind of get a feel for it, or have some tools to help isolate that. So here's an example. We slammed down into the close on a Friday afternoon, and then we're closing close to the June intraday lows. But we had over 1,000 stocks up more than 5% this week, including almost 400 that were up 10%. Meanwhile, the market was pushing lower. So really trying to help narrate what I see going on underneath the surface. And at the bottom, it says, this week, I'm suggesting a major bottom may be forming. Can we finally corral the next bull, or are we afraid of it? And you can see here, nobody's even looking at this bull, and it's only a couple of feet away. And that's kind of the idea, is to just share, through this newsletter, a one-page summary or the continuing pages after, to give you some idea. So what would be my comments right now? So I created this page, but essentially we have 1,200 stocks down big versus 800 up big over the last 2 weeks. And the reason I used last 2 weeks was because we had the Thanksgiving weekend in there. But as you look across the charts, this 1,200 down big versus 800 up big really isn't that helpful for a big bull market. So again, it might be contrary to what you're seeing or hearing from the media. The market closed up 1.5% or something on the Friday, or for the week. And my point was just, you know what, we should be careful here, because the market's literally got these underlying structural issues. And so I try to lay it out in a couple of quick sentences, a chart, to clearly show what I'm looking at. So the next thing is the weekly chart list. And what happens on the chart list is, as you're working through a group of charts, you'll get some ideas. But typically we have some anchor tenants. The oil chart, the copper chart, the US dollar, maybe some foreign currencies that are a little different, maybe some stuff indicative of Asia or the banking sector or something like that. And try to just give you some charts that, without having to build your own chart list, you can go through and look and see all of these things. So I think it's pretty important to just have something that you can quickly jump in and see what I talked about either on the video or in the newsletter, and give yourself some tools to look at. And this chart list, again, it can be all over the place. It can have US dollar indexes, bond yields, European financials, whatever's kind of interesting at the time. And then we want to keep track of those. And then after a while, they'll fade out and some other stuff will become more important. So I think it's critical that in the market, you have an approach to figure out where you're going to sell, because buying is important, but letting all of your profits erode is very, very difficult. And I know lots of people who over the last 5 years have pretty much just broken even. They made money in 1 year and lost money in the next year. And by the end, you're just not accumulating. And so the trick to that is to try and sell near the highs and buy near the lows. And we're going to cover off how we might be able to do that. So the Osprey opportunities, they're not always the same, but the bigger focus on the opportunities is, as we start to see the markets change, there's certain sectors that you want to get into. And right now, consumer staples and utilities and healthcare are the strongest ones, but they're not really where you want to be invested for big growth. And so that gives us some clues. But as the market changes, then we'll be able to start to pick up on some of that. And one of them might be, let's say, the energy crisis that's coming. Having a list of 200 stocks from different sectors and industry groups, we can at least focus on something in I'll call it a theme or a strategy that we can make money. So with that, do you want to own the Osprey opportunities when the SSIs are negative? And the answer to that is probably not, because usually when the market is pulling back, you'll find a lot of the stuff you're in starts to get damaged. Now, we never know where the top is going to be or the bottom is going to be. The only thing we know is we're in an uptrend or we're not in an uptrend, and we want to be on the right side of the trades during that. And so we continue to move our stops up. So if we have something working really well and we think it's going to continue for a while, then we'll just keep moving up our stops. So if the price starts to reverse too hard, it kicks us out. But in general, we'll try and ride a trend as long as we can. So after that, we have these daily setups. And what are daily setups? In the market, each time, the market is essentially behavior by investors. And what we see is patterns repeating over and over and over again. And so when we run these scans, they try to show us patterns that historically have worked out well. And even while the market is correcting, we'll have these patterns building. And then as the market starts to break out, all of a sudden, all these patterns literally start to come alive and all the investments start to work. So the idea is, even if we don't have the daily setup for today working, what we want to do is we want to wait for that setup, or at least be watching it, especially if it's a stock we want to own. And as it starts to break out of the pattern, then we can start to buy it. So these setups, again, these patterns, we've seen them thousands of times before. They're on charts all over the place. They're on weekly charts and daily charts and hourly charts. We typically work with daily and weekly. But the idea is that we want to show you stocks that are working and breaking out of these familiar patterns. So if we have a stock up 25%, we're not going to be recommending that stock or telling you, go buy this one because it's up a lot. It's exactly the opposite. We want to buy them when there's obviously people interested in holding the stock around this level. And then it starts to take off to new thrusts higher, and that's a better place to be invested. So this is an example right around late October. Chart is setting up, and you can see we pushed off the October lows and ran up quite hard, and then consolidated right around horizontal resistance. The chart breaks up. It moves from, let's say, 58 to 68. That's pretty good money, almost 20% in a couple of weeks there. So it's those types of setups that we start to see, and as they break out, they're really helpful. And again, hopefully what you'll find is when you start to use the timing of the market of, when the momentum is improving, that you'll actually make more money in the markets, and also you'll have a reason to start exiting trades, because it's really hard to sell winners and it's really hard to sell losers. What we want to do is try and keep the losers out of the portfolio. And so we sell them relatively quickly. But the bigger thing is when the market starts to roll over, then we know to tighten our stops. And if our stock starts to get taken out, then we'll just exit the trade and wait for the whole thing to start again. So it's this cycle approach to the market. And it's not just a number of days. It's actually using the charts to tell us when the momentum is changing. So let's get into the strength indexes and exactly what are they. They are designed as a big picture to say, is the market in a positive thrust or a negative thrust, and try to give us a method of getting out near the top and getting in near the bottom. And if we can't do that very well, then it's going to be very difficult to own stocks in an uptrend. So I think you'll find the strength indexes are a really good clue. Now, will they work on everyone? I'll give you examples where they didn't work and where they do work. But the whole idea is to try and hold these stocks once a rally starts and make some real money. So recently we had almost 90% of the industry groups heading lower. Well, okay, so some stocks breaking out today. Well, who really cares if the odds of owning 10 stocks, 9 out of 10 are falling, and you're trying to buy a new one today? It's hard to do. So what we like to do is avoid that jumping on the last train or the last car on the last train. We want to get in on the first car on the first train and start to get into the rally early. So we like to buy before the 3 or 4 weeks of uptrends have started. And this is a common problem with a lot of investors is they like to buy after the market's moved up for 3 or 4 weeks. The issue with that is most of the gains have already been made. And then the stock starts to roll over and they go, well, that's okay. We're in a big uptrend or whatever. So we just want to hold on. Well, as an example, utilities were doing really, really well in 2021. You had a lot of renewable energy stocks doing really well. They've actually been going down for 18 months. And the real question is, why all of a sudden did some of those stocks not do very well? So we have to be very cautious about trying to own something because it has a long uptrend and keep holding it as it goes through the downtrend. So the whole process here is to try and help you find a timely entry into the market and how to get out. And I think I've got some pictures that will explain that a little bit better. And again, we don't want to get in late and hold through the downtrend. So these strength indexes are our core guiding principles for when to be invested. What you'll typically find out is if I gave you the dates that all of these started to work, you go back and look, that's probably when your portfolio started to make money. And typically when they all started to weaken is probably when your portfolio lost money. So here's an example, and this goes back to October the 10th. So this is the Monday before the market makes its new lows. And what you see here is the market is sitting right down near the lows for the year, closing on the lows. And yet my indicators are starting to fire up and give us a clue that something is changing. And so if we move it forward just a couple of weeks, so October 13th was our stock market low. It ran up pretty nicely from there. And my strength indicators had just started to move back here and had moved up quite nicely. So this is the idea behind them, is to try to get us ready to buy down in this buy zone. And it's when nobody else wants to buy. It's feeling very uncomfortable. The stocks are on their lows and I'm getting all bullish and people are wondering what's wrong with you. But on the other side, when they get up near this top area, we want to start getting more defensive. And so it's that area that, again, it can stay up there for a month, but the whole idea is being ready when that trend ends to leave and collect your profits. So lastly, we have a monthly conference call, and the idea behind the conference call is to make sure that as you're working in the market, if you have questions, you can come onto the monthly conference call. And typically I don't cover off the stuff that we cover off in the weekly newsletter. It's bigger picture. Where are we now? And try to answer some questions specifically about some of the strategies. So this monthly conference call, again, it's like an open line. Dwight and I do some presentations on there. But again, at the end, we want you to ask questions. And we just happen to be hosting one tomorrow. We picked the date on the weekend. But anyway, it's going to be tomorrow for November the 30th at 5 p.m. And again, we'll pick a theme. And here, obviously, we're in a roller coaster year. So where are we in that cycle? And I think one of the things that is rewarding for me is that I get feedback from my clients saying, you know, that they've either protected their portfolio or they've made a lot of money, and I feel good about that, and hopefully you can enjoy that same experience. But to wrap all of this up into a couple of things, I want to just show you some things here, and then I'm going to show you exactly how we use the strength indexes and how that works out on what we call the plum system. So protecting the nest egg is critical. We want to make sure we have capital for the next leg up. And then again, a subscription service needs to be affordable. And I see a whole bunch of programs out at $2,000 a month and that kind of stuff. Like, this is half the price I pay a guy to mow the lawn or shovel the walk. So less than $20 a week. I think it's a very affordable process. But again, the whole idea is to help people move forward in the market. If you want to do all the intermarket review, you know, then you probably wouldn't need my service. But if you like watching NFL football on Sundays instead of writing a newsletter, you know, perhaps you'll find that this isn't necessary. But if you want somebody to kind of give you the short clues, that's the idea here. And again, identifying themes from chart work, not from fundamentals or stories, or, you know, trying to figure out whether retail is going to do well. Well, we'll know when retail is going to do well when all of a sudden we start to see the charts change. And we want to be ready to buy near the lows when the backdrop improves. And, as an example, I went through one of my videos and I showed all of my buy points on October the 13th, the stocks I was buying. And the reason was because I was all set up on the weekend before saying, I'm very, very bullish here. I want to get long the market if it starts to reverse. And so that's the idea, is being ready to buy near the lows. So this is what we call the plum system. And what we do is we want to back up the truck and start to load stocks when we get our signal. So as my strength indexes start to lift off, I want to own stocks. If they turn around and fail within a week, we probably lose money. Not a lot, but we will lose some money. And the idea is to just get out and wait. And September, we had a rally like that. It went up for 4 days. All of my signals started to fire and it immediately reversed. So it doesn't happen often, but when it happens, we have to take our medicine and just move aside. But if we can get out to 2 or 3 weeks holding these stocks, all of a sudden we're starting to make a little bit of coin. And again, each time we're trying to make decisions based on what we're seeing in the marketplace with the action of the stocks and all of the different portfolios. So we've got our truck and we're proceeding along and we own stocks during this rally. And so as we go, if we can get to 4 weeks, we start to make some real money, maybe 10 or 12 or 15%, starting to make like annual returns within the month, for annual returns for most people. And if we can get to 5 or 6 weeks, typically we're going to need a bigger truck, and that's a good problem. And then as the market kind of starts to lose its momentum, then we want to unload the truck, make bank, and then head back to the beginning and just sit there and wait for our next signal to get long the market. So in a bull market, we're going to have some run-ups. In a bear market, obviously the declines are longer than the run-ups, and we want to start to at least just be sitting there. And so we wait for the data to improve and then start to get in. And I think that October example was pretty good. So each time we add one of these, we're starting to take all of these different approaches or different time spans and add them. And at the end of the year, we can make real gains. And I think, the big thing for me when I started to use this system was I went from kind of just barely outperforming the market to all of a sudden a hockey stick of outperformance, because I just didn't participate in the downtrends. And that was even including 2021. But the bigger thing was in 2022, the market's been running down for the most part. My portfolio has still done pretty well. Again, it had big shocks in it, like that September one. But, we're not going to get them all right. We're going to get the majority of them right. And the idea is to try and make money. So if we can make money in a bear market, we're going to make a lot of money in a bull market. And again, we want to do this roughly 8 times a year. And so each time we do this, we hold them for a while, then we let them go and we just wait. And when it's all done, then we're just sitting there waiting to pick up again. And so I like to call the system the plum system: pick up the load and make bank. Now, if you look at kind of how the market proceeded, the first week off the October lows, we were up around 6%. Then the second week, we were up another 2%. And at the end of the whole cycle here, on 4 weeks, my portfolio started to dip a little bit. And then as it got a little longer, it started to dip again. And I just said, you know what? I went into areas of strength and got hit with losses. My stops got kicked out. So I'm just out. So I exited the run from October to now with about a 9.3% gain. And again, I got shooken out when FTX was the largest bankruptcy for the year, started to hit stocks. And then CPI came out the next day and reversed right away higher. So some of my clients might have actually stayed in through that. But the whole idea of the system is to try and give you a place, a reason to enter and a reason to exit. And when we start to lose money after this cycle or starts to erode our profits, then we just want to wait for the next setup. So again, what can we do specifically that's different? Hopefully the award-winning analysis gets you a better understanding of the market. We have a plan that I don't know if the market's going to bottom in March of 2023, and there's predictions out there based on cycles and all that kind of stuff. I know where it is now. And the idea being, if we're wrong for about a week. But for the most part, we're going to be in the market for big rallies, and we're going to be out of the market when it's going down. And if we can do that stair-step approach, hopefully you'll make a lot of money. And again, if at $20 a week, I don't think it could be much different. So here's a serious offer. Literally for $7, you can go onto the website and try the site and just see if there's something there for you. I would encourage you to ride it for a few market cycles to help get a feel for the system. We'll also send you a short 3-minute video on the Plum system to show how you get this staircase approach working. And it just gives you an idea, a little bit of an overview of how we integrate the SSIs into that process. So with that, I'm going to wrap it up here. What I wanted to do is just check for questions, and please fill the chat box with them. And I would like to try and help you understand, why we want this strategy. But I think when we're looking for, somebody wrote here, Osprey's best for short-term trades. How about for medium or long-term investors? Well, we have a whole bunch of clues that I include in the newsletter about where the overall health of the market is. And so if you were to say, how was what's the backdrop? I would tell you right now, only 1/3 of all of the charts in my market analysis group, I have 167 in there, but of that chart group, only 1/3 have a momentum above 0. So we still have 2/3 with negative momentum now. It's improving, but it's still negative. So those big clues can also help you stay in a bull market. I would just say that one of the reasons for Osprey Strategic was I was a big belief in just, own stocks above the 200-day and all that kind of stuff. I was also trying to figure out when to sell stocks. And the problem for me is I didn't take profits. I just kept holding because I was in a big bull market. Well, I think we all know that the stock market topped in November of 2021. But the issue was if you were in any of those SPAC-related stocks, Space and Zoom and Peloton and a whole bunch of companies like that, your profits were long gone by then. So if you want to be a long-term holder and just only ride the cream, I can give you some hints for that. 70% of the sectors have positive momentum on a long-term basis on weekly charts. So yes, if you just want to buy and hold and hang through that, cool. I think what you'll grow to find is, like I did, I was just giving too much back. And so if you want to be a retired investor that never looks at the market, you could use that simple indicator out, more than 50% of the sectors or 50% of the industry groups are moving higher and I want to be involved. I think the real hard part of that would be if we end up having a couple of years of chop here with supply constraints and high interest rates and, different sectors really struggling. Then I think we're going to be in a much more difficult environment, and it's not going to be, buy in March of 2020 and sell in November 2021. That's a hard model. And so I think you'll find it's very, very difficult. So the idea here is to try and get the stair step going. And I wish it could be a ribbon, but it's a stair step. And the idea being, hopefully you'll make money over time. So do you tell us when to buy and sell? So I specifically tell you when my indicators are starting to break out on a buy signal, and I do that daily. And each one of my newsletters tries to convey, I expect the market to move higher from here. I expect the market to So, and again, I can't promise the future. I don't know the future. I don't know what happens tomorrow. I can tell you that investors are positioned for higher highs, higher lows right now, or they're running out of steam. The momentum is failing, and it's probably a good time to take profits or at least tighten your stops. So the newsletter titled this week was Turkey or Tourniquet. And in other words, do we need to stop the bleeding next week? And that's the real type of thing that I think you can look at. So what are the Osprey typical annual returns going by recent few years? Well, my portfolio is up 40% as I speak today for 2022. 2021, I had a banner year like most people did. It was up very close to triple digits. And so it was pretty strong. But again, I'm not sitting here, I can't promise the future, because if the future is a flat sideways market, we're going to make a few percent on each one of these rallies. If the future is a pretty vigorous market with lots of chop in it, then we're going to make 10% stay out, make 15% stay out, make 5% stay out, lose 3% stay out, make 10%. But the whole idea is we'll have a much bigger trend higher. So can you show us a typical SPY chart with some of the indicators you use? Sure. So let's go in here and just put the SPY on here. And so I have a whole bunch of different ways of looking at the charts. The big thing for me is momentum is a really important thing. So this is PPO at the bottom. And many of you might have heard of the MACD. But what the idea behind the PPO is it's a percentage movement so that we can compare it over history. So if I showed you the weekly chart for 2021, 2022, relatively smooth trend. This was 347 to 310, pretty big drop in September of 2020. And then obviously we got the big November rally started by the vaccines, and that was pretty solid. But the idea being your PPO momentum stays up nice and high. And that's what I was saying is if everything's up above zero, you're probably in a bull market and maybe you just want to ride that. I would just say if I go grab a stock like Peloton or whatever, once it rolled over, it looked like the strongest stock. And if you listen to the fast money traders, they're like, you know, I'm going to hold Peloton, or sure, it might slow down a little bit, but it's still a strong business, or I'm going to hold Zoom because it's really doing well. Well, it's very difficult to do that. So if you sit here with Zoom, you know, the stock rode up for most of 2020, hit its highs up in here. My PPO fired off a sell signal, and at least it's telling us something's changing, right? But here's the issue. This thing went down, and just when you thought you'd had enough, right? It went from 588 to 250. You're thinking you're cut in half already. Well, it went all the way down. And so the problem is you can always wish we sold earlier, but you can never say, I saw the top coming. There is no sign it is at the exit. There is no CEO telling you to sell the stock. And so we have to use technicals or at least use them in combination with earnings. But, you know, I can give you the dividend stock I saw them talking about this morning on Twitter was this AQN. And, you know, they're sitting here holding it for 2 years and feeling fine. You know, I'm in a dividend stock. I'm okay. The thing yields pretty good. And then all of a sudden it drops from $17 to $10. They're out, you know, 30 or 40%. Well, you need a lot of 5% dividends to get that back. And so, well, maybe not all stocks are going to do that. You know, we can go through Walmart or something else. And again, this stock has made you no money for 2 years. So if you wanted to be a long-term buy and holder through this stock, you could, but you went from 159 to 116, so roughly a 30% haircut. And then the stock starts to work higher. Well, the only thing I can try to subscribe here is if we look at a market. So here's Walmart, and again, the stock market topped out around the end of March, and Walmart went for a couple more days, two more weeks or something before it kind of rolled back down, and it started to roll over. Now the S&P was in a pretty big correction at this point, but then all of a sudden Walmart probably reported earnings and it gaps lower. And so even on this chart, right, here's the June 13th low, here's the August 19th high, here's the October 13th low. Here we are sitting at the end of November. Is the market topping out? Well, again, my indicators, my strength indexes are still strong, but they're all starting to lose their upside momentum. And so what I want to be aware of is if the market's going to roll down here, that at least we keep the profits we've got. So even if you're in a quote safe stock like a Walmart or a Costco or whatever, you're probably still going to find some of the trends that you see in the overall market. But reading on Twitter, you can watch people, they had double and triple mortgages on Tesla. This stock, this is price corrected now. So this is with the 3-for-1 stock split here. But November, $414, $166, you've lost 50%. If you had double mortgaged or triple mortgaged your house, taken a second or third mortgage on your house to own Tesla because you got an opportunity to buy on the pullback, it's very hard. And I don't have to use margin or borrow on margin to buy my stocks. I don't trade the options market. You could overlay options if that makes you feel comfortable. The bigger thing for me is just trying to be aware when the overall market thrust is higher and I want to be on board. And then as it starts to run out of steam, and if we just pulled up the NASDAQ and look over the last 3 weeks, what has it done? So, well, not much. It's basically been sideways for 4 weeks already. So we're definitely losing momentum here. And if we were going to start to roll down, at least you'd be in cash and you'd be ready. But what's more important is when do I get back in? And so that's the whole idea of the system of the strength index, is to keep you aware of the overall market. And again, the newsletter overlays that, the video overlays that, the one-page summary overlays that, just trying to tell you what I see in the charts. And again, I can be wrong, but I think it's made some pretty good opportunities for most people. And if you can start to participate in the uptrends, miss the downtrends, we don't have to really predict the 3-year future or the 4-year future of the stock market, as long as we can ride the uptrends when they're really, really strong. So with that, I'd like to wrap it up. If anybody has any more questions, you could also send them to info@ospreystrategic.org. And with that, thank you very much. We'll be doing a draw for the book. So anybody who watched the live show today will get an opportunity to win the Stock Charts for Dummy book. And then the second thing that we'd like to do is anybody who does subscribe, we'll send them the 3-minute video on the Plum system, just trying to explain that. If you want to check out the the monthly conference call tomorrow, for $7, you can subscribe to the website and try it, but at least you could go back, look at all our historical calls in and out of the market and check that out. So with that, thanks everybody. Have a good week and good luck in December's investing. Thank you. Bye-bye.